Welcome back, everybody. I'm Edward Bilder, and I'm back today with a very special video to talk about what's happening in the U.S. with stagflation. A very historical moment in time coined the term of stagflation. This is when capitalism ended and all of these bubbles were created inside of real estate, inside of the stock market. I hope this video helps you prepare for what's about to come so you can come out on the other side smiling and winning like I plan to, okay? But before we get into it, remember to like and subscribe to the channel. This channel will start to change as we're migrating away from EIDL, so get your updates daily on small business and everything happening in the economy and much, much more, so you can prepare yourselves for what is about to come. You're gonna start to learn how you can make money just appear like the Fed does, okay, while you're sleeping. I have a secret crash course in the description that teaches you one of my methods of how I earn passive income using Airbnb. It's on a mega sale right now. Rush up there and grab it. That sale will end tonight at midnight. And if you want to learn how you can partner with me on my current B&Bs, find me on Instagram and ask about my Zoom calls. Okay, I want to get into stagflation here because so much is happening in the economy. We have so many signals that are telling us we're inside of stagflation. Oh, lots to talk about. Let's get it going. Now, I found this article inside of CNBC interviewing Michael Hartnett. He's an investing strategist for the Bank of America. I'll post that inside the description if you'd like to check out that article. But he discusses 3 phases of stagflation, and it points to very clear signs of what's happening right now in the economy. I'm going to discuss those 3 phases for us here and offer some final takeaways on how you can prepare yourself for what is to come here and protect yourselves, all right? So stay to the end of the video. I'm going to keep this as short as possible. I want to start with defining what stagflation is because it's a period of low growth and rising prices. That is right now, okay? I don't know if you've recognized this, but prices are going up, primarily related to inflation and everything happening in supply chain. And it's obvious if you go and check the big box stores like Walmart, Target, Home Depot, and Lowe's, you're starting to see the shelves are becoming more bare. They're a bit more empty, okay? Because consider for a moment that 99% of all of the goods that we consume each and every day are imported, okay? We basically print free money and trade it because we are the world's reserve currency. And well, when that money becomes less valuable, we see less inventory on our shelves. And you got to be asking yourselves, like, how is that possible that 99% of our goods come from imports from out of the country? Well, that's because we're a country of, let's call it domestic services. We are the Ubers, the lawyers, the doctors, the accountants. We're the restaurants, we're the hospitality services, we're gyms, and we're consultants, all right? We are not producers of our own goods, okay? We do produce some goods, but not many, okay? Stagflation was first recognized in the 1970s when we faced an oil crisis and we were leading into this price pressure that was happening and increasing unemployment. Now consider, right now we are definitely inside of a point of price pressures, all right, as prices are rising in the stores against our goods, and unemployment is still a problem, right? You could recognize this, walk down a strip mall, and you'll see all the now hiring signs in all of the windows. Go to your local Burger King, Taco Bell, McDonald's, and you'll see, due to staffing problems, we're having limited hours, okay? Go to a restaurant and ask to be seated, and it takes about 2 hours to get yourself seated because of limited staffing. This is happening across the U.S. in all major cities and even in the smaller ones. I live in a smaller area, and this is happening in my area as well. So it's very obvious that stagflation is among us. History does paint a very clear picture for us of what we should expect to see today. We could reflect back on the 1970s because in the 1970s, stagflation started and it was undetected, okay? It started around 1965. Hartnett believes that we're inside of stagflation right now, okay? So it's not going undetected. What we saw in 1965, there were 2 clear signals. The stock market went up and inflation went up with it, okay? And when those bubbles burst that were created in the 1970s, the stock market dropped 50%, okay? This created this very euphoric feeling. Everybody was rushing to the market before the bubble burst, and everybody was happy, celebrating, okay? We're seeing that right now, all right? It's very obvious you're seeing that right now. Clear signs that the bubble is getting close to that teetering point, all right? Just over Labor Day weekend, we saw Consumer Price Index rise to 5.4%. That was an all-time record high. So let me know in the comments if you also believe that we are currently inside of phase 1, teetering on phase 2. And to talk about phase 2, we really have to reflect back on a historical moment in time, August 15th, 1971. That was when President Nixon took us off the gold standard. They took the US dollar off the gold standard. Now, it was a very historical moment. It was when all of these bubbles were created. We broke our promise to the world because our US dollar was backed by gold. This ended up giving the Fed free will to print as much money as they wish. And this happened because we printed too many units. Being the world reserve currency, we've gone and printed too many units that when these other countries were like, hey, I have these green dollars here and I want to trade it for my gold, we didn't have enough gold to give them back. We ended up breaking our promise of what we created in like 1944. And now we could print as much money as we want out of thin air, which creates this new thing called deficit spending. Print as much as you wish, okay, and grow these bubbles until they pop, right? Just to put this into perspective, in 1996, we reached about $5 trillion of our national debt, all right? We did climb from 1976 up to 1996, but $5 trillion was our national debt in 1996, and now we have doubled it in the last year, okay? We now create money from thin air, which we could do as long as there's not some significant price increase out there or significant amounts of inflation, all right? Consider our money as fake here for a moment, okay? We are the world reserve currency. So if the US dollar is absorbed by other countries to, say, buy things like oil, everything would be fine as long as prices do not increase. But the real fact is that because of inflation, prices are going up and the US dollar is going down. This is one very clear sign that we're heading into phase 2. Other countries are raising their prices on goods and then returning that money back to us in exchange for securities and real estate, okay? The Fed right now is printing $120 billion to buy federally backed mortgages and securities to have available to sell to other countries. Our dollar has dropped against these other currencies, okay? What happens when this happens? We see less inventory on the shelves and less variety in the stores. And what other countries do during this phase is they increase the cost of their goods sold, take the dollar, and then return it back to us by buying up our securities and our U.S. real estate. Because let's face it, if other countries can't return this money for gold, they're going to return it for some real asset, which we're seeing right now. So what performed well back in the 1970s? Well, commodities, of course, which we will talk about in our takeaways. Because phase 3 is really where we need to prepare ourselves. In the 1970s, real assets outperformed what was happening in the stock market. Consumer goods took a hit and tech stocks took a hit. Now, our buying power today is being affected by the fact that our dollar is worth a lot less today and all these consumer goods are on the rise. And a little hint of what you could possibly see happen in the stock market as this new bill focuses on heavy tech. We could see tech stocks go in the opposite direction, but remember that bill is currently on a pause, okay? And as a result of these bubbles, the stock market is actually upside down. If you think for a moment, the stock market should be a reflection of goods and services. As goods and services climb, so too should the stock market. But right now, everything is upside down. As the stock market climbs, goods and services follow right along with it, okay? Which is why our government focuses heavily on keeping people inside of the stock market. One thing that came out of the 1970s was the 401k process, which put the average person into the stock market to help the performance go up, creating this moment of flipping it upside down. So let's talk for a moment here about the warning signs, all right? Because this bubble will most likely burst, okay? And we're seeing some very clear warning signs that are out there right now. Shelves are getting bare. All right, that is very obvious. You head to your big box stores, you're seeing shelves becoming bare, okay? If Congress stays inside of some type of gridlock and they don't negotiate on a stimulus plan or a plan to spend more money, remember, they have to keep spending money in order to keep this thing propped up. Otherwise, the bubble will burst, okay? There is no current plan for a stimulus check for the American people, all right? That is not happening inside the current bill. We're talking about infrastructure bills and human infrastructure. But there's not a lot of money that will actually reach the people. There's not a lot of money that will actually reach small businesses that need it to prop up their stores as well, okay? And people are not returning back to work. Very, very clear sign that we're going to see a problem here. And for various reasons, right? The Delta variant is on the rise, and people just would like to see a change in their lives, okay? They don't want to sit inside the 9 to 5. If you take a look at Microsoft right now, they're actually not returning anybody back to work. Another big problem because all that commercial real estate is going to suffer. Right now, if you go to New York City, they are about 40% occupancy on all commercial real estate. Big problem. This is going to happen across all major cities in all of those big towering structures, okay? There won't be any building of new structures for quite some time, and that also helps boost the economy. Now, the Fed is also printing $120 billion to buy those federally backed mortgages and securities. These are all very clear signs that we're heading towards this bubble bursting. All right. Which leads me to some takeaways I want to give you here. All right. Let me know in the comments if you think we're inside of phase 1 or if you think we're inside of phase 2. I believe that we are inside of phase 1, but we're heading into phase 2 because this is where your commodities, the prices start to increase. And yes, commodities are going up, right? It is happening. They are going up. But the one big takeaway that I want to give you here is that you need to start buying some precious metals. Put about 10% of your portfolio into precious metals. And don't bet against the house to buy these precious metals, okay? Let me give you an example, all right? One of the easiest things you could do right now to fight stagflation is to get yourself a fixed rate mortgage for 30 years. Get out of variable rate mortgages and grab a fixed rate mortgage. Don't go and bet yourself against the house, okay? Bet against the cash cows, all right? In other words, don't refinance your house and then go and buy yourself a bunch of gold. The gold does not cash flow. Instead, you should be financing into things that will cash flow for you. This is things like farmland. This is things like rental units. I'm doing this right now using my B&B properties, okay? I buy real estate and I turn them into B&B properties because even a single family home will cash flow 4 times as much as a standard leasing agreement for a year. And it will even cash flow 4 times as much as a multi-unit apartment complex, all right? So those are my methods of doing it. And I always stay within a fixed rate mortgage on all these properties. As long as I could cover my mortgage and have cash flows on top of it, I could keep that cycle going and going and going, all right? Now, don't just rush out and buy real estate. It does take a lot of practice to do this, okay? Because right now the price of real estate is at an all-time high, and there is some negotiating you need to figure out and learn exactly when the right moment is to get inside that real estate, okay? Another key takeaway is to get into some cryptocurrencies, all right? You're getting off the US dollar every time you go into cryptocurrencies. And the cycle here is not the same as the US dollar, all right? So be careful when you're getting into cryptocurrencies. It's not something that you just want to dive into. It also takes a lot of research to get this done. Because I'm not a financial advisor, I'm just giving you the perspective of some of the things that I do to combat stagflation, okay? If you guys would like to join Webull, BlockFi, Robinhood, or M1 Finance, you can check out links in the description, help you get this done. Deposit a little bit of money, and they'll give you all kinds of free stuff, free stocks, free cryptos, and free sign-on bonuses through the links in the description. And I thank you so much for tuning in to another video today. Before you leave, remember to like and subscribe to the channel. Help us grow and evolve this channel into something new. And if you guys would like to continue to support the channel, remember you could rush up to the description and learn how I use Airbnb to buy all these real estate and to generate all that passive income while I'm sleeping. It is on a mega sale right now, and it will end tonight at midnight, where you could get into the real estate game with a $50 bill in your hand, cash flow in 3 business days through Airbnb, earning an extra $5,000 to $10,000 each and every month. No credit checks. You don't have to own the real estate to do this. And when you want to scale up, you just repeat the process over and over again and scale and grow to as large as you wish. It is on a mega sale until tonight at midnight. Rush up there and grab it while it still lasts. And guys, if you'd like to learn how you could partner with me and my current B&Bs, find me on Instagram and ask about my Zoom calls Tuesdays, Wednesdays, and Thursdays at 7 p.m. Eastern Standard Time and 8 p.m. Eastern Standard Time. Don't forget, I have a new B&B bootcamp coming out in 2 weeks. It's going to be a 6-week course where you get personal consultations with me to help you grow your B&B business and get it started and launched off the ground. Guys, I wish you all the best. That's going to do it for today, folks, and I will catch you all on the next one. Bye for now.